All right, if you're hearing that theme song, you know what you're here for. This is the Compound and Friends. We're live from the compound. I don't even know what we call this, but I am super blessed today, and so are you, because we have somebody who is going to really help us figure out exactly what's going on from the Washington, D.C. perspective. We talk so much about markets from a Wall Street perspective, of course, but these two things are now hopelessly intertwined. What happens with policy is what happens on Wall Street. And of course, it's been that way before. It is that way again. And today we're going to talk with Steve Pavlick, who is a principal at Mindset and the head of policy at RenMac. And you guys who are loyal listeners and viewers, you know Neil Dutta. Of course, you know Jeff DeGraff. Now you get to meet Steve. Steve, thank you so much for joining us today. We really appreciate it.
No, thank you for having me on.
Okay. And you are in a bunker, a tariff bunker. Where are you located? What city?
I'm in Potomac, Maryland, outside of Washington, D.C.
All right. Stay there until this is all sorted out. All right. So we're recording on a Monday afternoon, and markets have been in flux. We had a massive down open today, and then a little bit of a turnaround. It looks like they got the NASDAQ green first, followed by the S&P, but there's still red everywhere. And there are now fake headlines coming out about 90-day pauses in before implementing tariffs. And of course, those are being refuted relatively quickly. But Steve, why don't you set the table for us? What is the current state of the tariffs? My understanding is that everything is going to happen as scheduled on April 9th as of right this moment. And of course, you know, depending on when you're watching or listening to this, that could change. But where are we today?
Well, I think, Josh, you nailed it. I mean, right now, the reciprocal tariffs are supposed to take effect at 12:01 after midnight Wednesday morning. We'll see whether or not they do actually go into effect. I think that's sort of mentioning the subject speculation earlier. And there's maybe reason for that speculation. You'll recall in February, Trump was going to put tariffs on Canada and Mexico, and he granted a 30-day pause after that. Yeah. So when they're refuting the 90-day pause, maybe they're just refuting the 90-day portion. So I think that's probably the best case scenario. I don't know that I would say it's the most likely case scenario on Wednesday, that maybe we do get an extension there, some additional time to negotiate. I think the worst case scenario is the tariffs go into effect. And I think we talk about this uncertainty right now. You know, if you're a trading partner, are you going to negotiate or are you going to retaliate? And I think that's sort of, again, going back to this uncertainty theme that we're seeing right now. And it's different for different trading partners. If you're relying on the U.S. for national security reasons, you have a lot more to consider there. So then you get into, okay, probably what may be more likely. If we don't get the pause, then perhaps we have some short-term pain, I guess, as the Trump administration will say. How long that short-term, I guess, remains to be seen. But that's probably going to allow some additional time for negotiations. Maybe the other trading partners are sort of aware of the political theater aspect here, that, the tariffs may have to go into effect, again, for a very short period of time, with the hope that some negotiations to remove the tariffs and potentially get some other things that the administration might want is probably the best case scenario.
If you're China and Europe, you understand that the Dow falling 9,000 points weakens the United States from a negotiating standpoint. It's not as though these tariffs were put on and Americans universally agreed this is going to be awesome and bought the stock market. Even the 10-year Treasury portion of this, which is, the administration has publicly stated that we should look to a falling 10-year as evidence that this is working. Even that part of it is not exactly going according to plan. We dipped below 4% on the 10-year and then rocketed right back higher, which is a sign of either people losing confidence in the United States or, more likely, people having to sell bonds to cover margin calls elsewhere. But one way or the other, there's a lot of havoc happening here, and none of it necessarily strengthens the U.S. negotiating stance. Would you agree with that?
Sort of. The reason I'm saying sort of is I think everything you said is correct. I guess where maybe markets and potentially some trading partners may be miscalculating President Trump's view is during Trump 1, we sort of had the Trump put, and we had him also running for re-election. I know he sort of teases this idea of running a third term. I'm doubtful that he will. But because of that, he may not feel as bound by the political pressures. There's also a chance that he may be misinterpreting his mandate because he campaigned a lot on tariffs. And he may, in his view, sort of be interpreting as, well, hey, I got reelected on this. Why are the polls not going this way? Well, in fact, maybe a lot of people were just sort of voting out of frustration over inflation and the reduced purchasing power. You sort of saw that phenomenon worldwide, regardless of sort of the political ideology of just incumbents really sort of stepping back. So I think from President Trump's perspective, it's about bilateral negotiations. From his standpoint, if the U.S. with large consumer base has more, to offer here, and that the other side therefore has more to lose in bilateral negotiations. The other sides might not necessarily agree with that, but I think that's sort of where he approaches it fundamentally. And from that standpoint, he sort of views it as they have more to lose. At some point, they're going to come around, and that time might be on this side.
Well, to that point, the Chinese stock market crashed. It was limit down. Hong Kong was down 9%. So it definitely appears to all the world that it's not just a falling U.S. stock market. Everybody has something to lose, and that's manifesting itself in share prices all over the world. So that part, I guess I'd agree with you on. We've got multiple mouthpieces all saying different variations on the broader theme. So the broader theme is like restoring the United States to manufacturing competitiveness and trade competitiveness. And we're not going to spend a lot of time debating the merits of that. We'll just say that's the broad theme that has instigated this thing to begin with from our side. But then you've got multiple people coming out with like different versions of that. So I'm curious from you. So you've got Kevin Hassett out there. You've got Scott Besson out there. You've got Howard Lutnick. They're doing all the shows. They're appearing everywhere. Sometimes they're talking about trade unfairness. Sometimes they're talking about restoring the middle class here. Sometimes they talk about national security, and we need to build these manufacturing capabilities again because we need to be able to defend ourselves in a war. Sometimes they're talking about the border and fentanyl being like a bargaining chip in this whole thing. Like, what's the signal? Because there's so much noise. There's multiple people talking on behalf of the administration. Is the signal just tune all of that out and listen to Trump because he's the only person in the end who can make a decision about whether or not this is going to change or go forward? Because that's the way that I'm trying to do this. But what are you telling people?
Yeah, I mean, honestly, Josh, you're spot on. I mean, Trump is a decision maker here, and various members in his administration will go out and say various things, but ultimately it's his decision. I mean, there are multiple plans prepared for him, and it's sort of how he, don't stir people, but it's how he feels that day. I say this as somebody who worked in the last Trump administration, so some, I guess, appreciation for the process. Look, when I think of tariffs, to your point, they sort of accomplish three things, but they sort of contradict each other. You can't have all three. So you can use tariffs to get revenue, which you may need to pay for some of the tax cut extension. You need tariffs. You can use them to get trading concessions, and you can use them to protect certain industries that you feel are really important for national security. And so I think what's sort of confusing and probably leading to a loss of confidence, candidly, is just that the justifications for what you're pursuing continue to change every day, sometimes multiple times during the day. And I think that's probably contributing to, again, what we're experiencing right now. And when I think of Trump, I think of sort of two things that he feels very strongly about in his history. And it's sort of a political seesaw. On the one hand, he feels very strongly about tariffs and that they can be used to sort of pursue some fair trade. Even he goes back to the 80s, and he's one of the few issues he's been relatively consistent on. Then on the other hand, he's the consummate deal maker. And so, he's sort of at one day saying, we need to do these and really leave them in place to reorient the global trade system and increase manufacturing here. But the later day, sure, I'm open to negotiation. So I think if you're a business right now, just this uncertainty makes it very difficult to deploy capital. I assume that's why some of these recession odds are rising, because not knowing whether the tariffs come on, whether the uncertainty over the application, the duration, I just don't really see how that's going to go away. And even if Trump tries to keep the tariffs in place for all 4 years, there's a very good chance when using executive authority that if we have a Democratic administration, they'll simply undo them. And if you're taking a long time to sort of get some of that return on your investment, I just don't know the juice is worth the squeeze.
Well, this is one of the problems is even if you agree with the policy aims of sparking this building of modern manufacturing facilities and using robots and U.S. workers and putting the unions, back into some of these businesses. Even if you completely agree with that, it's a stretch to imagine a scenario where businesses don't, instead of playing along, just kind of hang back and wait and see, because all of this stuff is going to be challenged in court. And to your point, the pendulum swings. And if you're building something because you think, okay, this is the new state of play, and we're going to commit billions of dollars in spending and multiple years in doing that, if you're the one that jumps and then the policy changes because a court challenge is successful, or Trump just wakes up one day and changes his mind, or he has a beautiful phone call with somebody in Europe, like, oh my God, I can't believe the amount of money we just spent and what we just committed to. And now the pendulum's already swinging back the other way, and none of our competitors are expending the amount of capital that we are. Like, that's got to be the reason that things grind to a halt. Even if you agree with the ideas, the execution requires this huge leap of faith that it's going to be worth it.
Absolutely. And I think you're hitting the nail on the head there with just, will businesses really take that next step? So, if I think about sort of the negotiations going on now, we've seen these reports that other countries are willing to reduce their trade restrictions, their tariffs and non-tariff measures. So on the surface, if that was really your own goal, it shouldn't take that long to reach a resolution. The issue, I think, to your point, is what does Trump want beyond that? And that's where you get to, okay, maybe all this focus on the deficit, and there's been a lot of attention to the economics, or maybe lack thereof, on the calculations for the reciprocal tariffs. But if it's really communicating, hey, we're focused on the deficit, then Trump wants to increase some U.S. exports. So does that become part of the negotiations with other countries? Okay, if you're trying to increase this foreign direct investment, understanding to your point that maybe there's some uncertainty amongst U.S. companies, well, can we sort of incentivize, encourage, or force other countries and companies to maybe make up the slack and get the ball going? So I guess if I have to sort of look at the glass half full application of what's going on here, I guess that's how I would apply it. And then, I think when you think of the trade, it's probably important to think of the tariffs in four different buckets. We have the reciprocal tariffs. We talked a lot about those. One thing I'd highlight this time that I think caught some people off guard, myself included, was the fact that he went with both the reciprocal rate and a universal baseline rate. I think that's to prevent some of the jurisdiction hopping, where, okay, now you can just move your manufacturing to another area of the world where you might not get the imports. Maybe we'll see all that walk back eventually. But I think that's why
that's the baseline, saying, I don't care where you move your manufacturing. If it's not here, this is the minimum tariff that you're going to have to deal with. That's what you mean by that?
Okay. Exactly. You articulate it much better than I did. And so then you get into one of the challenges, I think, from before, and that's where I have Canada and Mexico sort of in another bucket there, is this idea of Chinese circumvention, where China's basically just rerouting products through other areas to avoid trade restrictions. You've seen Vietnam be a big beneficiary of that. Mexico, obviously, to some extent, Canada, maybe to a lesser extent. But I think that's sort of what's going on there. And there may be a political opportunity after the Canadian election at the end of the month to eventually find an off-ramp there. I think the sectoral tariffs, we talk about things that are used for national security, probably a blurring distinction with respect to economic interests, candidly. Things that, maybe it's not in the U.S. financial interest to build these things here, but it's important that we do. And so you talk about steel and aluminum, autos, you're signaling copper, gold, pharmaceuticals, semiconductors. These things are areas that the Trump administration identified as important. We may be able to get them at low-cost places, outside the U.S., but it's in our national interest collectively to do these things here. I think those tariffs are going to endure.
I think a lot of Americans actually would agree with that part of it, the sectoral tariffs. Like, we should have a domestic steel and aluminum production industry. It should be stronger than it is now, and it's strategically important that we don't get into a conflict where we are begging other countries to provide us with material. I think Democrats, Republicans, I think they would all agree on that. Semiconductors. I mean, we saw the Biden administration push through the CHIPS Act. I don't think that number one, I think if this had gone that way and the argument was, hey, we actually understand that tariffs are a tax, but we're doing them anyway for these 8 specific industries because we think it's in our national and defense best interest, I think the response on Wall Street would have been way less chaotic. Still think we would be down. I just don't think it would look like this. I don't think we'd be looking at $10 trillion in equity wiped out in a week if that had been the rationale. Do you think the policymakers, if they could do it again, would have gone sectoral rather than baseline and all over the world?
I think you're right to point out that there's probably more, and the polling suggests this idea for the sectoral approach. And also, I think to take a tough approach on China. I think where maybe the administration, not saying misreading the polls, but definitely not the public necessarily on their side. We started doing the tariffs with Canada and Mexico early on. The reciprocal rates were higher than people thought. Again, I think that was just sort of this idea of the Trump put. The only thing I would say this time versus last time, I think to consider is one, when you're a lame duck, this is your last term, this idea of pulling forward the pain. So do it earlier during the administration. The idea that we're going to have time to build a recovery before we get to the midterms, before we get to the 2028 election. So I think there may be some political logic to doing that.
Just let me stop you. This idea, let's cause the pain now and we'll fix it by the midterms, as if that's how it works. Once things get out of hand, there are a lot of unforeseen consequences that could prolong a downturn far longer than you might hope for if you're running a political calculation based around elections in 18 months. I
agree. I mean, I'm not. Yeah. I'm just saying, if you had to sort of back your way into this, let's get to all these 3D, 4D, Trump chess theories. Where I do sort of understand. Hey, look, trade was at the top of the agenda. We want to have these things. Let's have them earlier in the administration as opposed to later. We may not be able to have that runway if we're months out from a midterm election, or we're getting too close to the 2028 midterm. But to your point, once these things start going, they're very difficult to sort of get the arms around. The other thing I just point out this time that's different than last time that I think is really hurting the administration that people may have missed is the sequencing. Last time you had the tax cuts before you had
first, end of 17 that passed. Right.
Correct. And they were actual cuts. You were reducing the corporate rate from 28% to 21%. You're reducing the top marginal rate for individuals. Now we're talking about really just preserving the status quo. I mean, essentially, Republicans get around this.
Extending the existing tax cuts that are going to sunset at the end of this year.
Exactly. Maybe you get some marginal things in addition to that. But really, you're talking about avoiding a headwind as opposed to providing a tailwind, which you did the last time. So I think, when people were sort of hoping Trump 2 is going to be like Trump 1, they're going to do the tax cuts. You have to rely on Congress. When it comes to Congress, always take the under on results, always take the over on timing. And that's sort of out of the administration's hands. As a result, through this political calculus, it was let's accelerate the trade portion and sort of we are where we are.
Yeah. So if this were simultaneously or sequenced differently, all right, we got the tax extension, but part of what's involved there, according to Congress, we have to find a certain amount of revenue to help pay for it, and we're going to do that via tariffs. That might have been more palatable or less shocking.
Maybe. I mean, I think there's still a lot of just misunderstanding as to you're talking about tax cuts. I mean, as you said, we're just extending current policy. So
right.
Really not going to have as much of a stimulative event as compared to last time where you were reducing the rates pretty considerably. Also, last time the tariffs were more targeted. They weren't nearly as broad. They didn't hit nearly as many trading partners at one time. So I think there's an element to that too. That's just different this time compared to last time.
One of the parts of this that I think is so frustrating to Wall Street. So on Wall Street, we think of things in terms of expectations and then results, better than expected or worse than expected. And that's kind of like the rubric through which we forecast and make investing decisions and how we judge whether or not a company is doing well or a sector is doing well or an economic report was a good report or a bad report. It's always like, here's the target or here's the whisper number or the expectation, and then place your bet. Is it better than or worse than, right? Or on the number. With this, I don't even know if you went to 10 economists at Wall Street banks and said, what's the target for this? Like whether it's successful or not. So all right, the Trump tariffs, the initial response, obviously stock markets hate it. currency markets are in flux, bond markets are in flux, like way outside of the realm of what we thought he was going to do. He was talking about 10%. And I think the market would not have loved that, but could have lived with it without this much volatility. All right, whatever it is, this is the policy now. Let's assume it sticks. What is the yardstick by which Wall Street can say this was successful or this was unsuccessful? Clearly, it's not the stock market. They're going out of their way to tell us that they don't care. So what is it? Is it number of factories? Is it number of manufacturing employees in the latest report added to payrolls? Like what are you hearing? What are people saying is the target here?
Well, they say they don't follow the stock market. I think the truth is they're very much following what's going on.
Yeah, sure they don't. Right.
Going on. And you raise a good point too about expectations. I mean, I think back, when I was a kid playing football, I had a football coach that said, the key to happiness is low expectations. I think it was the opposit for Trump coming in. You had a lot of enthusiasm in markets were at an all-time high.
We ran it up. It
was like, you're granted coming down from an all-time high there, but I think to your point, now there's just a question of this overall uncertainty and what are we trying to accomplish here? And I think from the Trump administration's perspective, it's going to be the stock market at some point. They're going to look to the jobs as well. They're going to look to economic growth. But you've heard several administration folks say there's going to be some short-term pain. How long that pain's going to be is a matter.
Well, Steve, the reason I'm asking the question is it would be nice if we knew what the conditions are that would cause the administration to say, okay, we're accomplishing our goal. We can go play golf a little bit more now. And so nobody could tell you or me right now what Wall Street should look at in order to determine Trump is getting what he wants. Therefore, things can calm down or normalize or it's working. So if you say GDP growth, well, you're definitely not getting a good result there anytime this year. Even if they take the tariffs off tomorrow, the effect of this is going to be lasting. Okay, so that ain't going to be it. Is it manufacturing employment numbers? Because I don't know. Is that's a 9-month to 12-month read through? So that's very far into the future. Now, if you tell me, actually, all he wants is these bilateral agreements that he can sit in the Oval Office and sign in front of the cameras, and that in and of itself will be enough to lessen the level of tariff. All right, that I could understand. So does he want to just be able to tweet Canada is back at the table and here's what we accomplished? I think the street could live with that, but it doesn't sound like that's the main thing anymore.
I think what they want to do to point us to how do you quantify this is you get these other countries to the negotiating table, and then you have to point to here's why it was worth it. And from that,
here's what we got.
Here's what we got in exchange for this. So we got them to reduce their trade restrictions. You could look at here's what the rates were before on tariffs. Here's what they are now. Here's the deficit. You can quibble whether or not that's the right metric to use, but Trump likes it, the trade deficit. So it was this number before. Now it's gone down to this number, and we are exporting this many more products here.
Okay. So we got Zimbabwe to the table. Big step. They have agreed to take the tariffs off what we ship there, as part of a negotiation, and we'll take. Okay. So is there any chance in hell that we're going to have a positive trade deficit with Zimbabwe? Is it even?
Probably not, but can we get it better? And look, this is where I get to the last thing. So we talked about the three.
Even Vietnam, I'm joking with Zimbabwe, but even Vietnam, we're not going to have a positive trade deficit with Vietnam ever. We're not going to sell them more than they sell us, period. It's never going to happen.
I agree. And this is where I was going to say the last week. We did 3 of the 4 buckets. We did reciprocal, we did sectoral, we did Canada, Mexico, and the 4th bucket all to itself is China. And if you're looking for right now, it's difficult to wrap your head as to why are we doing this? And if behind the scenes, part of the negotiations is, can we isolate China? Are you getting some of these trade partners to pull away from them and actually work with us? Then I think there's probably a longer negotiation, could be more pain ahead with China. But ultimately, that's probably in the U.S. national interest to do that. And so you mentioned Vietnam. I thought, and I could be overreading this, it was very interesting to me when Trump singled them out Friday saying, hey, they want to negotiate a deal here. Because I sort of mentioned, Vietnam has probably been the worst offender in terms of basically letting China come in and reroute their products there. So that message is being communicated now because all these other countries are watching how their peers are responding here,
Yeah.
And so I think you see Vietnam starting to pull more towards the U.S. It's like, well, wait a minute. Okay, maybe we ought to start doing that too and consider that. So I think you may see some sequencing here as to announce the deals. And there's also probably an element of, do you want to sort of hold some of these deals back and announce them in a batch? And the reason for that maybe is if you sort of announce, okay, we made one big deal early on, does that sort of become the template for everybody else? Where it's like, well, okay, the Trump administration was able to reach a deal with, you said Zimbabwe. Okay, well, we'll just sort of try to strike something similar. And does that sort of hurt your process and your negotiations moving forward? So that issue with China, I think, is going to be the dominant topic of our time. And if there's some, larger aspect, reason behind why are we doing all this now, if it turns out that it was, hey, all along these conversations, it was about getting these other countries away from China, then I think that might, in the end, history may be kinder to Trump.
Okay. Did Mexico and Canada get carved out of this particular wave because those are much more politically fraught negotiations for both Republicans and Democrats, and maybe just too messy to tackle in the earliest stages of this?
I actually see it a little differently because last time, and I was still there when this was going on, we talked about sequencing. Last time, the first block Trump focused on was Canada and Mexico. That was the negotiation over USMCA.
Because it was repealing NAFTA effectively and redoing NAFTA, right?
It was, but also going back to, he did that before he pivoted to China. The idea is like, you need to fortify your relations with your neighbors to the north and south, make sure China can't infiltrate them. One of the unforeseen, in hindsight probably should have saw this coming, was China rerouting products through Mexico. That's something that they need to close down. And so I think this is about, okay, how do we accelerate these USMCA renegotiations ahead of July 2026? Can you sort of, again, put that North American bloc on firmer footing to allow Trump to pivot a little more aggressively towards China? I think there's something with that. And look, I think you're right too. I mean, just because of the nature of our borders, we rely so much more on trade. You have congressional interests there. So I think that's why I have them sort of in a separate, block there. And again, I think a lot of this political stuff is just theater, just be honest. And they have their own issues there in Canada. So I'm more optimistic that beyond the April 28th election, that eventually we'll sort of reach an agreement. And I think Mexico's done a great job. I mean, Claudia Sheinbaum, the president down there, has really, I think, done a master class of other world leaders want to look at how do you deal with President Trump. I think she's really head and shoulders above the rest.
Do you think so you must know this, the world leaders, they have to play their role in making Trump look good? And maybe Claudia is a great example of this, where she understands exactly what he needs in order to not overly attack Mexico in a trade war. And she's willing to give it to him. And that's political theater on her end. Like, it's almost like, well, this is a play and I already know what role he picked for himself. And I already know how he wants the third act to go. And therefore, I should write my role around his role and we can get through this quicker. You think that when you say political theater, it's not one-sided. It's not just us blustering. It's the other side understanding what they need to do in order for us to all get a happy ending to the play?
Right. I mean, everybody has their own domestic political interests. And in some ways, Trump may actually help Sheinbaum in the sense that he gives her some political cover to maybe be more aggressive on the border, do some things that maybe she probably wanted to, but may not have been in her domestic
and now she can say, this is part of what I had to do.
This for Trump, and it's maybe candidly what Mexican government needs her to do. It was just going to be very difficult with the domestic politics there. So she's able to sort of, I think, triangulate that stuff. And, with Carney, it's a little bit different. I mean, Trump has sent the Liberal Party in Canada through the roof. I mean, they were facing obliteration with Justin Trudeau. But there's other political dynamics, too, where it's like, okay, if you are in a country and you're opposing Trump as a world leader, in some cases, that's politically the popular thing to do. So it's important to watch these effective dates for when you come out for some of these retaliations that these other world leaders are.
Yeah, it's a really good point. Like, resisting Trump in Canada is politically, it's great. It's right. It's a great side to be on. and he makes it easier for you. Like the political theater that you describe, he's putting you in a starring role.
I mean, it would surprise me if, like, behind the scenes, we find out, Carney and Trump been talking this whole time, and Carney's saying, "Thank you for getting me elected to prime minister by coming out and doing all this stuff." I say
Yeah.
that tongue in cheek, but there's a lot of that. I think more going on than people realize. And to that point, it's like, okay, elections behind us. I sort of said what I had to on the campaign trail. Carney knows it's not in Canada's interest to escalate things further. Let's find a resolution.
All right, I got a few more for you. What was your term? What years were you a part of this?
Sure. So I was on the Trump transition team back
Yep.
in August of 16, I guess.
Yeah.
Interesting times there at Trump Tower. Joined the Treasury Department, day one employee, January 2017, and then left in October of 18 to join RenMac. So that was my experience there. And then my role was as a legislative liaison for the international portfolio. So working as the administration sort of spokesman with Capitol Hill on issues related to trade, foreign investment, particularly China.
Okay. So if you had to guess, or maybe it seems to me that there were a lot more rifts among the people involved in the trade discussions in 2018. It felt like within the same day, you could see headlines saying the exact opposite. Things were being discussed between the various parties. And of course, Representative Lighthizer was sort of the face of this. This time around, it seems like while they're all saying variations of the same thing, there don't seem to be rifts. There seems to be higher message discipline. I'm not sure if that's just an accident or that's on purpose, and maybe that could change. And also, this time around, it seems like Scott Bessent at Treasury is the face of this thing, along with Lutnick, whereas I don't remember the Treasury being as heavily featured in the media defending the tariffs as they are this time. So I'm just like giving you my perspective of this as somebody who's consuming the news and doesn't know anything about what's happening internally. But like, what's your interpretation of what we're seeing?
I think your analysis is spot on, and that's somebody who was sitting there before. And there's some reasons for this. I mean, look, I don't know.
Like Mnuchin was not doing what Bessent is doing now. You would agree with that?
Yeah. What I will say is I think Mnuchin was probably more aligned with Gary Cohn, Larry Kudlow, more sort of
free
traders, and sort of pushing back against more of the Navarros, the tariff enthusiasts that you like, and United States Trade Representative, Bob Lighthizer, accomplished trade attorney, strong views. I guess he'd be more in the pro-tariff camp. But the president, in my experience, always liked healthy debate and was okay, let's hear
team of rivals.
Yeah, a little bit. Let's go ahead and let's duke it out. I mean, candidly too, that role was new to him versus now you're sort of in this interesting situation where he had 4 years out of office, a lot of time to think about what is this team going to be like and try to get maybe he would say more a cohesive group. And so I think that's the difference now, at least in the Treasury Secretary position, is, Bessent sort of, I think, reading the room is like, this is a direction Trump was to go in tariffs. There's a reason he's pulling forward. It's clearly a priority for him, something he feels strongly about. And so even if he maybe not necessarily agrees with all the philosophy that's been going on, I don't know, this is an interest if you want to keep your job to sort of come out and try to push back against these things. So I think you're right, where there's probably less public dissension, but I still think privately there's a lot of conversation, shall we say, behind the scenes as to the best approach. Okay,
so on that topic, and we'll end here, the calculations themselves have been the subject of a great deal of ridicule. The formulas, the Greek letters, where these numbers came from, the fact that they're trying to factor in the trade deficits themselves to come up with what the appropriate level of tariffs would be. The fact that there are some territories that were thrown in here where no humans live. It's all polar bears. It's all penguins. Okay, great memes. We all got a lot of, that was like almost like a little bit of gallows humor we all got out of this situation as we watched our 401ks crash. As you're looking at this, somebody that was once on the inside of this, what's your take on just the general amount of derision that's greeted the execution of these tariffs, including the rollout, the big cardboard poster. Like, how do you, without getting yourself into trouble, like, how do you think about the response to this stuff generally, from the cognoscenti on social media?
Well, I mean, people are going to.
Where do you stand on penguin tariffs, I guess, is what I really want to know.
Pro-penguin? Yeah, I guess I'm pro-penguin. I don't know if they deserve the tariffs, but
the penguins are stealing all our good egg hatching jobs.
Exactly. We were low on eggs for a while, so don't rule that out. But
you substitute, right?
I guess where I come down on it is, we talked before about how President Trump's the ultimate decision maker. We also mentioned that you have competing interests there presenting a lot of different plans. My sense is he probably had a variety of plans presented to him up into the very last minute. And at that point, it was sort of like, let's do the reciprocal rate, but let's also do this universal tariff rate. And then sort of like, let's find a way to back into some analysis to support the direction we want to go. And I think, perhaps that explains why they chose the approach they did with the math. My guess is that the White House, President publicly would say, the trade deficit captures both the tariff and non-tariff measures. That's why they decided to use that as their
currency manipulation, the barriers to entry, the regulation that only applies to us. Yeah, I get that.
And Trump, from his, hey, I want to be able to market this, is the visual. It's like, here's what they're charging us, and here's what we're going to charge them. Now, again, a lot of people probably will follow the math and economic logic, sort of, or lack thereof, behind it. But to most,
that's why the market. That's the proximate cause. I think the market was weak going into it and would have fallen either way. The crashiness of the market is directly correlated to that moment where they held up the board and people just said, "Whoa, whoa, 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 that don't look like 10%." That's not what our expectations, which were already bearish. That's like way out of control versus what we thought. That's what I think happened there.
And to your point about expectations, because Trump had been messaging, "Hey, I'm going to be very generous. I'm going to bring it much lower than them." And you're sort of looking at it, go, okay, well, Europe tariffs 10% on our cars, we're at 2.5%, so maybe we'll end up at 5%. Like, okay. And then you
35.
Out, you're like, whoa, like,
All right. You busy these days? You're inundated, I bet.
Yeah, when I'm not doing work and there's a lot of work to be done, I got my oldest is going to be 4 in August. Youngest is going to be 2 in July.
All right. So you got your work cut out for you. All right. Hey, Steve, I just want to say thank you so much for joining us. We really appreciate you kind of giving us an idea from the inside what's happening and what you see now from the outside, being in Washington and talking to people. So this is super helpful to us. Thank you. Where should people follow you to get more of those insights? Of course, RenMac is the easiest place to go. Anywhere else?
Yeah, I would say RenMac.
You got a Signal chat cooking somewhere, or what?
I do not. I am not much on social media. RenMac podcast on Friday.
All right. Awesome. You're the man. Thank you so much, Steve. We'll talk to you soon. Thanks for watching. Thanks for listening, guys. We're out.